Hello and welcome to our live VAT strategy broadcast. Thank you very much for joining us. My name's Tom Herbert, I'm the business editor of AccountingWEB, and for the next 40 minutes or so we'll be talking all things VAT. Remember, you can join in at home via the Cover It Live box. You can ask questions which we'll put to our expert panel at the end. This broadcast is sponsored by Concur. To check out their VAT and expenses solutions, visit concur.com. The broadcast will also be available on demand on our YouTube channel and on the website, so look out for the follow-up article. Speaking of Concur, on our expert panel today, we're joined by Matt Lewis, the Compliance Director and former VAT Inspector for HMRC, and by Joe Serrurier. He's the Finance Director for software company Itelligence, who are one of the biggest SAP resellers in the UK and Europe and indeed the world, I think, Joe. So we've obviously had a momentous couple of weeks, both politically, economically, and we've just had a new Prime Minister yesterday, we've had a new Chancellor announced today. Just thought we'd start by digging down a little bit into how the events of the last couple of weeks, including the referendum, might impact on the VAT space. We'll look a little bit about compliance and reputational risk, move on to technology and process, putting in place a good VAT strategy, and end with the questions, which you can ask via the Cover It Live box below this stream. So Matt, I was reading something you'd written fairly recently on VAT, and you mentioned that people's eyes tend to glaze over when they're covering it. Why do people find it so difficult?
Yeah, I mean, it's a good conversation stopper at a party. Just mentioned VAT. I think generally it's one of those things. It's a regulatory thing that you must do and you must get right, and the penalties when you get it wrong. But actually, I think it's one of those things where people assume it's very difficult and confusing. Actually, it's like most things. It just has its own terminology and language. And in fairness, it's fairly logical. But there are always exceptions, and it's those exceptions that scare people a bit.
And Joe, how does VAT impact on your business?
Well, I mean, it's always there. I mean, VAT it affects everything that you do, but not necessarily. I tend to feel that the companies they hate it for one reason, because of course you're collecting the money on behalf of the HMRC, and you want to, well, you're not really getting anything out of this, but it's something that you just have to do. I think is the best way to take it, like PAYE as well. You are the source of collecting the revenue for the HMRC, and you just have to do it. I think sometimes companies do get a little annoyed that there's penalties involved when it could be seen that they're doing HMRC a favour by collecting the monies for them.
Great, and just broadening this out a little bit, so why is VAT important to all businesses, Matt?
Well, I think VAT, unlike a lot of other taxes, it affects every transaction you do. You need to worry about it for everything you sell, and you need to make sure that you maximise your recoveries on everything that you purchase. It hits your bottom line. It's a transactional tax, so you pay too much, it reduces your profit. So it needs to be well managed, and you need to be people need to be aware that it's while sometimes you can think it's very simple, in and out, doesn't really affect us. Actually, it does. It can. They're the traps you can fall into.
Fantastic. Moving on to the update and overview. I'm going to add a caveat in right at the beginning. Anything we say about Brexit, it's the 14th of July, and we've obviously got a new government in place, but anything we say about leaving the EU is purely speculative. But if you chaps will indulge me in a bit of wild speculation, what do you think the potential impacts on the VAT space will be of Britain's decision to leave the EU?
I think it is pure speculation at this point. We can all come up with theories. It all depends on HMRC's what work streams they put into place as part of the negotiations to go through Brexit. and how much of a priority that gets up over everything else that needs to be done.
How complex is it going to be for them, do you think?
It depends. Again, you know, they may decide that we continue as we are.
Mm.
You know, our models, our VAT systems modelled on the EU law, it will probably continue to do so. What it does, it gives us more scope to fiddle around with bits and pieces, so we're not bound by minimum rates and maximum rates that are set by the EU.
Mm.
So, you know, the one thing we could introduce some new zero rates, which we've been stopped from doing for many years, but we managed to keep what we had, which is why nothing's changed in those. The only thing is that if you introduce new zero rates for some things like digital books or what have you, you've got to balance the books. Right? The government has to balance the books, so you reduce that somewhere, it's got to be raised somewhere else.
Yeah.
Whether it's VAT or another tax, but you know, the books have to be balanced.
And Joe, the FRC recently, I think a couple of days ago, issued a statement asking companies, asking finance directors, other directors of companies to assess the risks, potential uncertainties around Brexit. Is that something you've had a look at, and what potential impacts could this have on your business?
Yes, definitely. Since day one, being a multinational country, and also with many, well, even our head office being in Germany, we've had to have a look at it. Of course, the most immediate effect has been the exchange rates, which the pound struggled in almost in 10 minutes after it was announced that the pound struggled against both the euro and more dramatically against the dollar. So straight away we've had to bring in a strategy on managing our foreign currencies here in the UK, and also, of course, with the other subsidiaries in Europe.
Yeah, and just winding out now, we will say we've had a new Chancellor announced in the last 12 hours. Philip Hammond has just taken over. So the impact of a new government, do you think we'll potentially see any rates changes, up or down?
It could very well possibly, but again, I think it will be as part of the wider the Brexit negotiations. I don't necessarily think there'll be anything immediate in terms of rate changes, but who knows? I think they've announced there's not going to be an emergency budget, so things will carry on as they are. And I think, you know, a wider working stream will be put in place to look at all the taxes, with VAT specifically, and import duties, to work out what exactly needs to happen.
And Joe, is there a specific process that your business goes through in order to, you know, assess the impact of any potential changes to VAT?
Yes, well, of course, having all the systems in place, one has to watch it carefully just in case of the changes, and then your system does need to be tweaked. And of course, unfortunately, when they do changes, they don't. Although they give you quite a lot of time to do it, you have to make quite a few changes to your system. So it is a concern. I tend to feel, you know, if you want to get speculative, I think what will happen now is taxes, and especially VAT, will probably become more of a political weapon by the parties. Kind of running up to elections, etc., we'll probably see drops in rates and emergency drops in rates, much like we had a few years ago, prior to the election.
Okay, and Matt, final point on this: is there anything that companies, of whatever size, really can do, you know, that put in place to negate the rates changes?
Manage them, yes. I think, you know, every organisation that's involved with VAT needs to have a plan, generally, regardless of any volatility and potential rate changes. It does affect every transaction. The more systems and processes that you have to manage your risk of that comes from VAT, the better. But you need to make sure that you are ready for any changes. Again, usually get a decent amount of lead time.
How much have you found on average?
It depends. I mean, you know, when the actual full standard rate changed over when we had the financial crisis, we were given not very long the first time. It was less than 3 months or
It
thereabouts.
was no time at all.
It was no time at all, but we had a long time to prepare for the subsequent re-raisings that rate.
Right.
And it's just being able to understand how long it's going to take you to make the changes, and then have a plan working back from that to make sure you can get there.
Great, thank you, Matt. That takes us nicely on to the compliance and reputational risk section of the webinar. We'll start off with HMRC inspectors, something close to your heart, Matt, I'm sure. But what are they actually interested in?
The way HMRC look at companies is very different from when I was there many years ago. But everything's based on a risk analysis now. HMRC, like every company, have been asked to do more with less, and so they need to target their activities on the people who need it most. And so they're interested in looking at a high level, understanding what a company's process, systems are, what they've got in place to manage the tax. They've conducted telephone interviews over the last few years to really understand, in business, what they've got in place. And all it does is highlights where there's areas and potential risks that they need to concentrate on. But also, should give companies comfort that actually they're doing okay.
And in terms of, you mentioned these areas of potential risk, is that sort of industry specific? Is it company specific? What's their...
It's a mixture of both. So, certain industries are just inherently risky from that point of view, because of the complex nature of the rules. So, property's a key one, which is just complex. But that doesn't necessarily mean anyone in property is going to be high risk from HMRC's point of view. It all depends on your compliance record, the systems and processes you've got in place to manage, the VAT. They'll look at all of that, and the less risks that they think you have from a compliance point of view, the less they're going to bother you. But HMRC, in fact, they work very well with business, UK businesses. They do listen to UK businesses. They can't do everything that they ask for, obviously, but everything tends to be discussed with businesses. There are consultation documents and to get the views out there. So we do have in the UK a very good working relationships with HMRC.
Yeah, and I guess one of the big complaints isn't necessarily around the consultations of the proposals. It's just around the resourcing that they have, I guess.
I think like most businesses.
So Joe, how conscious of all this are finance directors, TFOs, finance managers?
Well, certainly been very conscious of the changes in the last few years. I myself had a couple of phone interviews from the HMRC, both on VAT and PAYE and the other taxes as well. And of course, also received audits as well. I think I hold the record. We might see if anybody can come up with a quicker one. But my last tax VAT audit was 15 minutes. He'd barely taken his jacket off and put his cup of coffee down, opened up the books to realise that there was nothing there for him, shut them, and found a timing difference, and that was it for him. Right. It comes to high risk areas. Services is another one that they like to investigate, because there's a lot of different rules in placement of where the services is and where it's built, and all sorts of different rules on that. So it's quite a complex one. But if you have the systems in place, it usually makes it a very, very quick process.
Okay, yeah. If anyone can beat 10 minutes, cover it live box at the bottom, let us know. But Joe, what sorts of things are they asking you on the telephone interview?
Well, they ask you about your business, and they're asking you where your revenue is coming from geographically, because again this affects the VAT especially, and what sort of types of revenue it is, services, in our case licensing, maintenance, etc. What they constitute, and then discuss what is a service, what is an intangible, if you like, and also how often we do it, what systems we use. When was the last time they were updated, etc. And in general, those sort of things. A lot of it is generally just about your business.
Yeah, thank you, Joe. Matt, are there any common pitfalls? Anything to specifically watch out for? Or really, does it depend on business by business, industry by industry?
The bigger, more high-profile things are usually industry, business by business. There are common areas that every business will need to look at. And in my world, that's around expenses. So, client entertaining is a key one. That's where you get looked at first, right, to see if you're claiming VAT incorrectly. Fuel and mileage is another area which we can all look at and make sure we're doing right. And those are the areas that can be quite easily and effectively managed by implementing systems.
Fantastic. Yeah, we will come back to that in a second. I just want to ask one last thing around the sort of both the reputational risks and the sort of penalty risks. What are they?
Well, I think the penalties are well published. They changed a few years ago. I think there's been a transitional period where HMRC were trying to get to grips with their new penalty regime, and certainly we were as well. Something goes wrong, the default is you get a penalty, and then you have to go back and argue, and there might be mitigating circumstances, you might go reduce it, suspend it. But those penalties are very real, and they are a pure cost to the business. I think actually reputational risk is something that we've all been conscious of if we're in business. We do not want our names out there in the public eye going, we've messed up, or we're big risk, or we're trying to do something that's not quite right. And I think that's certainly my experience has been there for a long time. I think HMRC are now looking to use that to their advantage a lot more, to try and get the transparency around tax, which is fair enough.
Fantastic. And Joe, final point on this: what can you put in place to try and make sure that an inspection goes smoothly, other than providing a nice cup of coffee for them?
Well, I think the main thing is you need to, in this day and age, the technology is there. And there's a lot of systems and processes to help. Certainly ones that have been closely worked with the VAT officers from around the world to make sure that each one of them is company specific, so that if you have a small business and you're running it, it will be almost plug and play these days, where you can put your information in and make sure that your data goes in correctly, and just keep clean records, really. And that's all you need to do these days, is to make sure that everything's there and everything's visible, and, as you say, transparency. I mean, VAT, although it can be embarrassing, it is of course something you can't negate. It's just something you have to live with. So your best on the reputation side is to make sure that you just don't look foolish. It's not like certain other companies who have recently spent a lot of time and effort negating their corporation tax. Nobody spends anywhere near that sort of money on VAT, because it's just it's not worth your while.
Well, it's certainly worth the government's while. I think they brought in about £120 billion last year from VAT alone. But moving on then, VAT strategy, talk a little bit about technology, talk a bit about processes. Matt, what should you prioritise? Strategy, technology, process?
I think you should add equal measure to all of it, in fairness. I mean, you need, first and foremost, you need a strategy. How are we going to manage our VAT? What is the business's attitude to risk? Once you've sort of come up with an idea of that, then you can look at, right, how do we do this most effectively, efficiently, and with as little risk of error possible. And that could be a mixture of process, people process, but there's also the technology out there these days to help enormously in that process. You can take a lot of that brain power almost, and knowledge, and systemize it. But that's not the end of the story. You've then got to update and maintain those those systems and technology in order to stay ahead. So I think you need to look at how can what processes do I need and how can I do that more efficiently.
Okay. I guess there's a danger of if you just implement a shiny new piece of technology without having the process or an overall strategy in play, then it's pretty much useless.
It takes some of the usefulness away.
Right.
Yeah. I mean, I think I've seen a lot of companies over the years try and systemize their current process, and their current process may not be the most efficient, may not actually be the best way of doing it. Putting a system in place or talking about a system or trying to automate certain aspects of it gives you the benefit of being able to look at your entire process and find a better way of doing that. Yeah. It may be that it's not, but what you do is absolutely fantastic, and automating that gives you the efficiencies and that you're looking for. But I often find that actually changing your processes, changing the behaviour of your people by giving them useful tools that are easy to use, gives you much better data and enables you to be far more compliant.
Joe, what's your strategy to maintain compliance, and can you talk a little bit about the pain points that you might have found previously and what your current strategy did to solve them?
Well, certainly, I mean, as you were talking about the technology, it's certainly processes and procedures and your systems. It is a hand-in-glove situation. I mean, I've been in the software industry for 25 years, and usually, if you're bringing in a new system, if you're not changing any of your processes, then there's a possibility you've done something wrong. Throughout that implementation, you need to use the strategy with your systems is to use it not only to make it faster, but also to make it more efficient. And one main problem also is to make sure that it's easy to change when changes do come. As we were talking earlier, that now we might be seeing a less stable rate environment for the VAT. It's one possibility. Another possibility is nothing will change. But to me, you need to have the flexibility to be able to change it at that. You also need to have it so that majority of the information these days is on the ground. It starts at the lowest level, and then you're just filtering up and managing it through the systems. So it needs to be easy to collect that data from the root documents, expenses, receipts, invoices. It all comes from the absolutely lowest common denominator and builds up into the report that then goes to the VAT office as one sheet that is uploaded into their system, and then that's it. So it's although it's all you give the VAT is one sheet. There is thousands upon thousands of documents that have rolled up into it, in your systems and your strategy and procedures. They need to be able to capture that in the most efficient and easiest way.
Great, thanks, Joe. So Matt, just talking about I don't know, let's say a small to medium-sized business. Could you talk me through what the purpose of a good VAT strategy is, and maybe a few key pillars of a good strategy?
Yeah, and I think certainly for small and medium businesses, their focus is growing their business. Most businesses is growing their business, but they tend to have less people, and certainly less people dedicated to just doing VAT. It's becomes part of a much wider job. I think the importance is that you want it so it's something you don't have to worry about on a day-to-day basis. You want to get to the point where actually you don't want to have to think about it constantly. As much as I would love people, and HMRC certainly would love you to think about it on a daily basis. It's so being able to have a strategy that says, right, we'll need to make life easier for ourselves, simpler, capture the data as most effectively and efficiently as possible, so we're not wasting undue time doing what is effectively admin. And I think it becomes more important to be able to grow your company to be able to not have to employ more and more people just to deal with VAT.
And how often do you think that it needs to be reviewed? Do you think it's a sort of as and when? I mean, as Joe mentioned, large changes come up. Is it a sort of half-yearly, yearly thing?
I think it needs to be reviewed fairly frequently. I think there needs to be a process of, I think internal audit is probably too strong a word for it, but a review to make sure that your process is working. I would say at least annually, but depending on how complex you are, whether you're involved in incredibly complex rules in certain industries, you may want to do it more frequently. But I think an ongoing review of your processes and where the information is coming from, and it's flowing in the right way, and you're getting the right data, and making the right decisions, it needs to be done fairly regularly.
Great, thanks, Matt. And Joe, you mentioned change there. What are the flags that would make you reconsider your VAT policy? Is there anything that stands out for you?
Well, I think so the way a business has to strategize for VAT, the main two things with it is, the main thing on a business side is cash flow, without a doubt. So this is how you have to consider if the rate increases. You then have to think about ways of making sure that your receipts of the actual money coming in relates to paying out of the VAT, paying out of to your vendors, etc. But it's a large part, and I should think, especially for smaller companies and medium-sized companies, to manage the cash flow of VAT more than anything. I mean, I suppose VAT and PAYE, the biggest tax they have on companies is time. So you do want it to be as quickly and as efficient as possible, but you do also have to very much consider it on the cash flow basis. So whether that means structuring deals so that the invoicing comes out on a periodic basis rather than billing up all front when there's different payment terms, things like that. You have to consider these, or else the problem is that you end up paying the VAT 20% of that sale, and you're not getting the money in until 6 months later. That can cause you a fair bit of time when it comes to pay the PAYE, which you have to pay the next month for the salaries that you have to pay the previous month before. So it's all about managing the cash flow, I think, for companies, first and foremost with VAT.
Fantastic, thanks Joe. Just to round off this section then, obviously AccountingWEB, we've covered a lot of expenses automation changes over the past couple of years. The space has changed dramatically, really. Are there any tools that you think have been real game changers? I'm thinking things like OCR or.
Yeah, I think there are. I mean, just generally, if I think back to some of the expenses systems that I've used, they were designed by us finance people. We needed the information, users had to provide it, or else they didn't get paid. That was it, and that from a general workforce point of view is not a great experience. I think the fact that the usability for the end user in the systems these days mean that it's so much easier for me as a traveller or someone who's out and about for the business to submit my expenses, that I will do it far more frequently to a better standard.
I guess it's, yeah.
And so then finance by default get much better information much quicker in order to do what they need to do with it. I think OCR is going to make a much bigger difference, should make life easier, but it is just an efficiency tool for the end user. It's not a holy grail of data capture. It is an efficiency tool. Still needs to be checked to make sure that it's pulling off the right information.
So yeah, but maybe that's sort of part of your process to make sure that the OCR, the optical character recognition, that you take a picture of a receipt on your phone and it reads, pulls the information out. Sorry,
it does. That? It pulls the information out. You still have to check it, but it does make life a lot quicker and a lot easier. Certainly, again for the user, but also from a finance point of view, you're not relying on the people keying in data, which has just an inherent risk anyway. The more you can automate, the more accurate that automation is, the better data you get, the better you can manage.
And I guess in the days of shoeboxes full of receipts and people tapping into Excel spreadsheets and things like that, that actually there was a large amount of VAT that went unclaimed. And I think when you mentioned to me earlier, HMRC actually want you to claim.
Yeah, I think the easiest way in when we say manage risk on VAT, a lot of people say, well, hold on a minute, if I don't claim any on this, then my risk goes down.
Yeah, no
risk. And that's true, but you're giving up an entitlement which HMRC would like you to take advantage of. They want you to have what you're entitled to, no more, but they also want what they're entitled to and no more. And I think letting money drift or sponsoring the government with some extra by not claiming what you're entitled to is not the right answer. And the tools are there now to make the perceived investment in trying to get what is a smaller amount of money back is much easier now. Yeah. So there isn't as much investment in that as anticipated.
Great. So yeah, if you've got a process that you feel is slightly outdated, it's worth looking around and seeing what's out there.
Absolutely.
Yeah. And certainly on that point, one of the major problems has been in the past is that the person putting the information in, more than likely is a non-financial person, and they don't know the rules of VAT. And is this receipt claimable? Can I put the VAT? Just be cautious and put the whole amount rather than separating the VAT. With the technology now, because you have VAT, the receipts and everything's there, the system will just pick it up. So they just say client entertaining, employee entertaining, whatever it is, and it knows the rules already because you've already put that into the system, and so they don't need to make that decision anymore. So they just put it in, and then the reports come out the other side for finance to check to make sure that all the VAT's gone through.
Fantastic. Great. Well, we'll move on to the FAQs, or move on to any of the viewer questions in a second. But I think when we spoke earlier, Joe, you'd mentioned a couple of annoying things that you found about VAT, and I think you had a top property tip that you mentioned as well.
Yeah, there's always a few things that will, I think, trip up everybody with VAT. And the number one is the rent lease payments. Most companies, you don't get a VAT invoice, you get a declaration of payment from your lease company for your rent, and so you pay that, but to put that on the system you usually put it in with the VAT. However, if you run that and it goes over a payment period, what will happen is that the VAT officer will get you on a timing issue, and it is totally a timing issue, it's just one or the other, but you don't receive your VAT document until after you've paid it, and then the rental company will send you a VAT document, and that's the date that you're supposed to put the document through, which is a bit difficult for your whole process as a run on doing POs and invoices. It makes it very difficult. I mean, the other one is, as you was mentioning before, with cars, with company cars, and fuel levies, which is something that I've yet to be able to actually get a system to work out fuel levy properly. That's always done offline, which is an unfortunate thing. And it's just, to me, it's a very small amount for our company and for a lot of companies, but I can see where it could be a large one, especially for transport companies and things like that.
Well, if anyone's got a good fuel levy system, Cover It Live box or the comments section. Thank you very much. Great, so it looks like we've had a few questions coming in on the Cover It Live page. Might be one for you here, Matt, maybe. From Andrew Robson. Can I reclaim VAT on a taxi receipt?
In theory, yes. Taxis are subject to VAT. A taxi journey is a VATable item. However, most taxi drivers are independent and trade below the VAT threshold, and so are not VAT registered. So, in order to claim VAT, like anything else, you need the right piece of paper or the right documentation. So if you can get a VAT receipt which has a VAT number on it and has the a VAT element to it, then yes, you can recover it if it's a business expense. You tend to find that actually most taxis are not VAT registered, and therefore there's no VAT on them, so you can't.
Right. Okay. Always worth asking. Always worth asking the question there.
Yeah.
Good stuff. This is one coming for you, Joe, from David. Doesn't give a surname. But what's the biggest VAT lesson you've learned in business?
Not to pay late. Definitely is. It was, although they have changed their penalty regime many years ago, we paid late, and it has a jumping scale at the time, and it was quite a hefty penalty in the end. So just number one rule: don't pay it late.
Right. Fair enough. Yeah, this one looks fairly complex. Hopefully we'll have an answer for you. They haven't given a name. Do you have any information on automatic standard VAT accounting that HMRC will be implementing in 2019?
I mean, that's a big subject, and the details are not fully out there at the minute. So
we've got 4 minutes, Mark. Yeah,
no, we can. We're going to follow up this with an article, and I think that's one of the areas we can look into.
Okay.
And do a bit more research on, so we can answer that one.
So it's fairly details unspecific. Is it like the sort of accountancy snow leopard that is making tax digital, or are there details around this?
There'll be details that are yet to be finalised. We've got some time yet, but we'll need to cover that off in the.
Has there been a consultation or anything like this?
I'm not close enough to it
okay,
to understand that.
Good stuff. Right, now one has come in from Harry. Is it possible, I've heard it's possible to claim VAT back on £25 worth of expenses without a receipt?
Okay. That's one of the rules which has been around for a very long time,
right,
and often misinterpreted. Now, the background to the no receipt for £25 it was actually brought in for telephone boxes, because you couldn't physically get a receipt from a coin-operated telephone box back in the day. But
right.
BT, as it was, were VAT registered. We all knew that, and they were the only people who could provide the telephone service.
Yeah.
So therefore, it was only fair that you could recover that on those services, even though you couldn't get a receipt. But the key part of that rule is it works for coin-operated machines where it's impossible to get a receipt. And the key part of that is where it's impossible to get a receipt.
Okay.
If you can get a receipt, you have to get a receipt, and that needs to support the VAT recovery. There has been case law which has refused that recovery because the company who was supplying it still in business, there's no excuse not to go and get a receipt. And I know sometimes it can be annoying and difficult, but where it's possible to get a receipt, is it expected you to have a receipt. You can't just blanket claim that back off anything under £25.
Okay, great. Thanks, Matt. Another question for Joe from Terry Godwin. Thank you, Terry. What's the hardest thing about VAT if you're an international company?
The hardest thing about VAT is claiming back, because if you're an international company, you have a lot of travel to other countries. And for me, the hardest thing about VAT is claiming VAT back from other countries, especially the French and Benelux and countries like that. Oddly enough, the EU countries are the most difficult to claim back on usually. So I think that's, for me, is the hardest part. Also, the other bit is in the service industry is what you're basing your invoicing on, place of work or place of billing, etc. on services, which can be quite confusing at times.
Fantastic, thank you very much. Well, we've had a ton of questions. I'm really sorry we have been unable to answer them all. We might be able to persuade these chaps to spend a few minutes offline answering them, but in the meantime, it's been an absolute pleasure, chaps. Joe Serrurier from Itelligence and Matt from Lewis from Concur, thank you very much. There will be an on-demand version available, and watch out for the follow-up article based on this discussion on accountingweb.co.uk. For more information about our supporters Concur, go to concur.com. And thank you very much for everyone who joined in by the questions and who joined us today. Thank you very much.